Apple's market cap was up a staggering $230 billion this week. And really, the biggest thing, the only real thing that happened for Apple was announcing Apple Intelligence. Now, we've known that Apple was going to get in the AI game in some way, shape, or form for quite a while. All of its competitors are doing something related with AI. And really, what Apple did that was different than everybody else is they're moving artificial intelligence on device. So if you have an iPhone 15 Pro, a Mac with an M processor, or an iPad with an M processor, you're going to be able to use these Apple Intelligence features on device. Basically search through emails, do proofreading, do all kinds of simple things that a relatively simple LLM or a large language model will be able to do. But the other thing is that they're going to be integrating now with OpenAI. So if you have a more advanced call, something you need information on, that's going to go to OpenAI. And Apple has said that they are open to more partnerships. So maybe Gemini, maybe Claude, maybe some other large language model could be integrated into this. And this is going to come through Siri as well. So you could be just asking your phone questions and then tap a button and go to OpenAI or Gemini or one of these other tools. But the question is this ultimately going to add value to Apple? And I have questions about not only the company's growth prospects, but what those margins are going to look like and what the valuation for the company is. Because right now, Apple is not at all a cheap stock. The price to earnings multiple is now 33. Revenue growth has stagnated. Sales of things like iPhones, iPads, and Macs have stagnated. Really, the only growth segment is services. And the reason that that is so important is about $20 billion in services revenue and margin comes from Google. So if people are using Apple Intelligence to replace Google searches that they would normally do in Safari on their phones, that could be terrible for Apple. And if this doesn't translate to increased iPhone sales, because people go through an upgrade cycle, which I don't know that they necessarily will, that won't be good either. So I want to go through all the details on what the numbers are behind this, because the market is obviously very excited about what Apple introduced. I think they're going to be very valuable tools, but this could ultimately be table stakes for a lot of companies in the tech world. So hopefully I'll give you something to think about with Apple going forward. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first go through a few charts and start with hardware. Now you can see here that iPhone sales have basically been stagnant since the December 2021 quarter. So more than 2 years, iPhone sales on a trailing 12-month basis, which is what this charted, have stagnated at about $200 billion per year. Now that's a phenomenal business, but it's not a growth business. I think one of the takeaways and one of the potential theories for Apple Intelligence is that including these tools in iOS 18 will give people an incentive to buy a new device, to upgrade to the iPhone 15 Pro or maybe the iPhone 16 when that comes out. That is definitely possible. But I also don't think that that is going to drive a massive new adoption curve for Apple. The number of people who are switching to Apple is not all that large. The amount of time that we're owning our devices is lengthening. So that's why iPhone revenue itself is not really growing right now, because I keep my iPhones for 3 years now. It used to be that I upgraded them at least every other year. So I think this is the kind of business that may get a little bit of a boost, but maybe not all that much when you start to look at what the trends are for the business long term. Macs show a very similar story. With Macs, the trends are even worse. Is Apple Intelligence going to boost Mac sales? Well, it hasn't really boosted PC sales. Microsoft is including a lot of the same features on their devices with their Copilot product. So I don't know that this is really going to be a big boost for Mac. The same thing goes for the iPad, which has been stuck in a rut for quite a while. So you add all of these things together from a hardware perspective, I think the potential upside really is going to be exclusively felt by the iPhone. And I really question whether this is going to lead to an upgrade cycle. The other thing to think about from the iPhone is the competitor to the iPhone is going to be the Android operating system. Android is built by Alphabet. Alphabet has its own artificial intelligence tools. It has its own artificial intelligence cloud. So does Google and Android start to include AI features with their devices as well? Now, this would have to be incorporated with hardware makers that they work with, Samsung, LG, all the companies that are making smartphones that are using the Android operating system. But at the end of the day, the operating system is run by Google, so they're going to be able to put artificial intelligence tools on device as well. They can also access things that you have in your Google account in the cloud. So it's potentially possible that an Android would know more about context for questions that you're going to be asking it than the iPhone does. So are these kinds of capabilities just going to be table stakes for smartphones in the future? I think that's very possible. And if that's the case, it's not really going to lead to a big upgrade cycle. So something there to think about. If the biggest benefit is going to be through the iPhone, it may not be as big as the market is anticipating today. The other thing to think about is services. Services and wearables have really been the only real growth segments over the last 5 or so years for Apple, and growth with hardware, with the Apple Watch, with iPads, with AirPods, that's starting to slow down. So services has really been something the company has leaned into. You can see from this chart, growth has been tremendous and margins are phenomenal. But what drives services revenue? Well, there's all kinds of things that go into this business, but the biggest thing, the biggest moneymaker, the biggest single line item for services is the $20 billion or so check that Apple gets every year from Google. Google is the default search engine in Safari. And when you go and do a search in Safari, if there is revenue generated from that search, the reports are that Apple gets about 36% of the revenue related to that search. So if searches that you're doing on your iPhone are replaced with artificial intelligence calls that go to either Apple Intelligence on device or to OpenAI or another partner in the cloud, that could be a problem for Apple's bottom line. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So the market is definitely cheering what Apple announced this week, but I think once you dig a little bit deeper, it may not have the same impact that investors are thinking on the company's revenue and particularly on their net income and their margins. In fact, I wouldn't be surprised if this actually hurts margins, because there's going to be an incremental number of searches going to Google that are now going to be done with artificial intelligence. For now, it does not appear that there is any money changing hands between OpenAI and any sort of partnerships with large language models that Apple has that are ultimately going to the cloud. We don't know exactly what the details are there. Before this announcement, it seemed like Apple might be paying for some of these because these are very expensive inquiries that are happening. Somebody has to pay for those. I did a video earlier that said, hey, Microsoft is actually footing the bill for a lot of these OpenAI calls. So that may be a negative for Microsoft, but it doesn't appear that there's money coming from OpenAI to Apple, unless there's maybe something like a 30% cut they get from the premium subscriptions to ChatGPT. But other than that, there's not going to be a lot of revenue changing hands because of the expense that goes into these artificial intelligence inferences in the cloud. And there's not currently great business models behind artificial intelligence the way that there is with something like search. So this is the fundamental challenge from a financial perspective for Apple. And what I think is if Apple doesn't generate a significant amount of new revenue and they actually have lower profits because of artificial intelligence, this could be a better product and a better service for consumers, but all of the value is going to the consumer, not to Apple. And so this will be something to keep an eye on. We don't know exactly how this is going to play out. Something like Apple Intelligence can be a phenomenal product, but it may not be a success on the bottom line. So keep that in mind when you're looking at Apple and when you're looking at Apple stock price. I think this ultimately makes the 33 price to earnings multiple look even a little bit more expensive for Apple. What do you think about Apple Intelligence and the finances behind it? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.